Our post-result teleconference for the first quarter of FY19. We have with us Dr. Sharvil Patel, Managing Director, Mr. Nitin Parekh, CFO, Mr. Tushar Shroff, Senior Vice President, Corporate Finance, and Mr. Vishal Gaur, Vice President, Corporate Finance. Coming to the key financial numbers during the quarter gone by, on a consolidated basis, our total income from operations was up 30% year-on-year to 28.9 billion rupees. On a like-to-like basis, adjusting for the GST impact, the growth was 31%. Earnings before interest, depreciation and tax were up 133% year-on-year to 6.45 billion rupees. Our EBITDA margin for the quarter was 22.3%. Profit before tax was up 269% year-on-year to 5.7 billion rupees. And our net profit was up 233% to 4.61 billion rupees with a net profit margin of 15.9%. Let me share some of the highlights of the operations for the quarter. Our business in the US posted sales of 12.3 billion rupees, up 27%. We received approvals for the US market, including one tentative approval during the quarter. We launched 9 new products in the US during the quarter. Our new launches include Zypitamag, which is pitavastatin magnesium tablets, our first product filed through the 505(b)(2) route. We filed 3 additional ANDAs with the US FDA during the quarter. Recently, in the month of August, we launched our own generic version of Asacol HD. Our India formulations business posted sales of 8.93 billion rupees, up 40%. On a like-to-like basis, adjusting for the GST impact, the growth was 44%. We launched 19 new products, including line extensions in India during the quarter, with 4 first-in-India launches. Our formulations business in the emerging markets of Asia, Africa, and Latin America posted sales of 1,963 million rupees, up 13%. We launched 7 new products in different countries of Asia and Africa, and 1 new product in Brazil during the quarter. In Mexico, we filed 1 more product dossier with Cofepris and received approvals for 2 more products during the quarter. Zydus Wellness Limited posted sales of 1.29 billion rupees, up 12%. On a like-to-like basis, adjusting for the GST impact, the growth was 25%. Net profit was up 2% to 257 million rupees. Our animal health business posted sales of 1.25 billion rupees, up 33%. On a like-to-like basis, adjusting for the GST impact, our growth was 37%. On the biologics front, we received regulatory approvals for 2 products from the regulatory authorities of Indonesia and Myanmar. On the manufacturing front, formulations manufacturing facility of Alidac Pharmaceuticals Limited successfully completed the US FDA inspection without any observations. We acquired 51% stake in the Dehradun-based Windlass Healthcare Private Limited with an objective of expanding our manufacturing base. Windlass has a robust manufacturing infrastructure with a US FDA-inspected oral solids manufacturing facility. It also has a dedicated R&D facility for formulations development and has developed 4 first-to-file ANDAs in the last 2 years. Thank you, and we shall now start the Q&A session. Over to the coordinator for the Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to limit their question to 2 per participant. If time permits, you may join the question queue for any follow-ups. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my questions. First, on the U.S. business erosion that we have seen quarter on quarter, is it fair to assume that a large part of this erosion is because of, Tamiflu, which was there in the quarter, and less so because of, generic Lialda?
Yes.
And if I exclude generic Lialda and Tamiflu, how has the base business in the U.S. done for us?
We are seeing about a 2 to 3% price erosion, quarter on quarter.
Okay. And my second question is on the Windlass acquisition that we have done. Now, this is a manufacturing facility that we have acquired. Are we constrained in terms of, oral solids manufacturing that we had to buy this? I mean, what's the idea behind acquiring a manufacturing facility which is USFDA approved? I mean, is this to target some business opportunity in the U.S., etc.?
Yes, it is. So I'll say we have had 77 plus approvals in the last year, and we continue to believe that we will be getting 50 plus approvals. We have an internal plan of launching between 50 to 60 molecules internally through our network. There are a lot of products which we have which are not the very high price or high value products, but still have opportunities of becoming those $1 to $3 million products. And there is a bandwidth issue that is also there in terms of us being able to manufacture all these products across all network and also commercialize through a marketing team. So we have strategically decided to invest in Windlass, which has the capacity to produce specialty and small volume as well as large volume products. We map the capacity to the current requirements of the current ANDAs that we have not commercialized to see if we can site transfer many of these ANDAs to this facility, and we are going to commercialize through this facility. Also, this company has been filing ANDAs also, some differentiated first to file and other opportunities of ANDAs that they have through their own R&D. So it will double down on some of the ANDAs that we will be able to commercialize through the development that has happened through Windlass. So in all, the money that we have gone inside the company for investments in capacity and investments in R&D, and this will help us to commercialize on 20 to 30 molecules that we have not been able to commercialize through our own efforts.
Okay. Okay, so these are 20 to 30 which you've got approval for but not launched.
We have more, but we'll see that we'll try and launch between 25 to 30 molecules in the next 2 to 3 years.
Okay. And how much time would we take, sir, to complete site transfer? This will probably start contributing in FY20 earliest, depending on the site transfer. Is that correct?
There will be some revenue in FY19 also, but most of it will be from FY20.
Okay. Thank you so much, sir.
Thank you. We have the next question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and good evening to all. Question on Asacol HD. You mentioned you've done your own generic launch. So just, understanding the maths correct, would the AG inventory will still be there and we would take some time to ramp our own market share, or would it be from August only we would start seeing sales to that extent of the market share we have in the market?
We will see conversion immediately from August.
Okay. And what happens to the AG product in the market?
As of now, there will be no AG.
Okay, so you will pull back the AG is what I want to understand. Okay.
Yes.
And could there be AG from the innovator, another AG or something?
It is always possible, but commercially it would not make sense in our view.
Okay. And any color you can give on the competitive landscape on both Asacol HD and Lialda?
So, current competitive landscape on Asacol, we still believe there are nobody is going to be in the market until the next 2 years because there are no active filers in litigation who have moved. So Asacol is still very clean in terms of any competition. For Lialda, we have one generic, which is Teva. We assume maybe there will be one more generic in the end of the year, but it is more likely that in the next calendar year there could be some generic competition. That's what our internal view is.
Okay, understood. And secondly, the Q&Q drop, just the Tamiflu, absence of Tamiflu does not explain. Could you help us, give more color? Is there been a substantial drop in Lialda also, or is you said just 2 to 3% Q&Q price erosion. So maths is just not adding up. About 70 million drop. If you could give more color, that would be really helpful.
2 to 3% is without Lialda and Osilimar, as I was answering for the other person who spoke to me. We have the majority of the value obviously eroded from Tamiflu, with sales had come down because of no flu season. And then Lialda also has, with the interest of Teva, also there is a difference in price. But I would say that both players have behaved well and the market seems to be still strong for both players.
So how do we see this run rate moving ahead?
Steady as of now without any further competition.
Okay. I have more question. I'll join back.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, thank you. Sharvil, one question on Lialda. I'm a little surprised to see on the market share as IMS reports that Cadila is losing share when Teva has entered. Typically, I don't see that. When AG is there in the market and Innovator also has a decent share, I don't see the single generic losing share. It's not that you are owning about 80% share and losing. You had 50% and you're losing share there.
Could you repeat your question, please?
Yeah, I'm saying that on Lialda. The IMS shows that Cadila is losing market share to Teva. Typically, we see this behavior when a generic owns about 70-80% share, but you have about 50%. You had about 50% share before Teva came in, and Innovator still has a decent share with AG. So I'm surprised to see Cadila losing share in Lialda to Teva.
It is not substantial share loss. We have lost about 5% share.
But and
Innovator would have also lost share.
But yeah, majority coming from Cadila, that's what I was a little surprised with.
It's not majority, it's 5%.
Yeah, but if you see Teva's share is less than 10%. So from that perspective, that's what I was meaning by majority.
Yeah, but when a second player comes, generally the high shares would come down for both, but it's not happened.
Okay, so is it, I would see, the import of my question was basically that, are you just trying to minimize the price decline when Teva comes in? Is it that you are just not hung on to your market share? Is that the strategy what you're trying to take?
Price discussions we cannot have. Just from a governance point of view, we can't discuss this pricing.
Sure. Okay, I move on to my next question. One is on the Toprol XL. When do you plan to launch that product?
We've launched.
When did you launch that product?
It started commercialization from August.
From August, okay. And on the Transdermal, when can we see first Transdermal launch for Cadila? In this financial year or next one?
This financial year.
This financial year. And just my last question is on other expenses. Now, after 2-3 quarters, we've seen other expenses going down. I'm assuming you would have reduced your discretionary expenditure. So is this the new trend? Now we should build in for other expenses for the rest of the year? Or they could go up as a marketing spend?
We have built some cost efficiencies in our spends in sales and marketing and also R&D. Also in this particular quarter, when you look at on Q1Q basis, trade and distribution costs are lower in this quarter due to reduction in sales in US, especially Tamiflu and other products.
Okay, sure. Thanks, Nitin.
Thank you. We have the next question from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. So just wanted to know whether after the Asacol launch, whether there is any price gap between the Lialda and Asacol. It seems that prices for both the product has appreciated sequentially in the last couple of months. Is that right, sir? That
will be the brand-related work. So we don't see any prices is stable.
Okay, there is no sequential improvement as such.
To which product?
So, some trend says that both Asacol SD and Lialda prices are similar only. Now it has become. And there is a sequential improvement.
That would be the branded price, not the generic side. The branded could have a...
I think this is the generic price trend I am talking about, sir.
No, we are not aware of.
Okay. Okay, that is... on the now Asacol SD front, so here whether the likelihood of a ramp-up would be, or what would be the likelihood of market share that we would be gaining or losing after this, and how long this can persist?
We were hoping to gain market share, and the conversion should be immediate.
Okay. And second question on the domestic business front. So, we have delivered a decent growth number and also launched around double-digit new products this quarter. So, going ahead, what is the kind of trend that one would see considering the high base of the subsequent quarters of last year? And how sustainable the number of new launches the way that you have reported this quarter?
So the new product, we have a plan that we launch depending on the therapeutic area. So we are on track in terms of launching new products. The number of products will vary depending on the quarters. The market has, this was an exceptional quarter because of the low base last year. So there would, next quarter you would not see very high growth because again, because of last year, the July to September base was very high. But end of the year, the business would stabilize and we expect a low double-digit growth going forward.
Okay. And can you comment anything on the possibility of FTC ban? What there is the motion on?
We don't get affected much by the FTC ban.
Okay. But whether that will restrict the new launches and hence the growth for the entire industry?
I wouldn't be able to comment on that.
Okay. Okay, sir. Thank you.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks for taking the question. So on Asacol HD, because you mentioned that there is conversion from AG to the product is going to be pretty quick. I mean, in the previous quarter, did we slow down on our primary? Was there a lesser amount of sales that we had done on Asacol, to sort of minimize inventory in the channel?
No, it was steady state.
Okay. Now, secondly, on what's your initial feedback on Zeptamax sales? Anything that you can tell us in terms of how you guys seeing the product scaling up as we go?
Yeah, it's 2.5 months that we have launched this product, and the going is good. It is as per our expectations.
And what kind of peak sales can we estimate on this? I mean, your sense on the peak sales for this product?
We are expecting sales of between $25 to $30 million.
That's a peak number?
Yes.
And then lastly, last con call, you mentioned that you're pretty comfortable with the fact that the U.S. sales will continue to grow even in FY19 on the high base of FY18. After the Q1 numbers, I mean, does that, you still hold to that guidance of a growth in U.S. sales for this year?
Yeah, for the whole year, yes. Because if you look quarter over quarter, the previous quarter, that is not part of the FY19. And that is because of the base which we just discussed. But otherwise, for the whole year, FY19, we expect a growth over FY18.
See, we are expecting to launch 50 plus molecules. And, when you launch products, first they're all staggered towards the late part of the year. And you don't gain market share from day one, so you build your market share gradually. So the momentum will get built up in the third and fourth quarter.
if I can push in the last one, on the manufacturing that you mentioned in terms of, the fact that you've got so many approvals and with the significant launch, new launches that you've planned, in terms of the manufacturing, so do you need to materially scale up your manufacturing capacities over the next couple of years to cope up with these requirements of new launches, or how do we see manufacturing, this whole the capacity part of it going forward?
So for the oral solids, we have already built capacities for the critical launches that we have planned for in the next 2 years. For all the new filings, some of the filings are going to happen through Vinlas also. But more importantly, the products that we have not been able to commercialize will get commercialized through this partnership. So we don't see any significant investment on oral solids, and we have just built our injectables facilities, which will be due for audit soon. So I think we have built the scale on that as well. So I would say it's incremental capex and not large capex.
Okay, sir. Thanks and best of luck.
Thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. You mentioned only 9 launches versus 50 launch for the year, planned launches for the year. You also mentioned you plan to grow from the base that, of last year of around $900 million. Just trying to understand, wouldn't the launches would be more front-ended so that, it gains some momentum, or what are the missing, what are the next few triggers which would help in growth? Just not able to add up.
The next few triggers will only be the launches that are starting to happen. The large part of the ER portfolio is just getting launched from July, August onwards. So a lot of them will take time to get scaled up in the next 2 quarters. So more of our portfolio on those, the nifedipine, diltiazem, the metoprolols, and many products like that to come are all getting now launched, which will get scaled up. And whichever products we launched in the end of the calendar year last year, they will all be adding up in the coming quarters.
Yeah, so from 180 base to going to 250, you think there's enough, these are enough to cover that gap?
Yes.
Okay, and lastly on, just understanding the maths of the own launch of Asacol, correct me if my understanding is wrong or right, that, it's like typically 20% and our own would be, say, 80-90%. So it's 4 times sales and 4 times margins. Would that be right way to think?
Sale is not something that you assume, right? There will be an improvement in margin significantly.
Okay, similar sales and maybe 3-4 times the profits.
Yes, similar sales.
Okay. So that will not add up to the US sales, the run rate. It would be the newer product launches and approvals that would add up.
Yeah, the Asacol would add mostly on margin.
Understand. Okay. And lastly, the acquiring 51% stake, company like your size could have just bought the whole 100%. So what's the thought process acquiring 51%? And we'll be doing our own ANDA approvals and, we'll be launching from that side. So we'll be sharing that profit.
The business is going to be run on an independent basis. There's a promoter in that business who's also built this business up to now. So it will be run on an independent basis, and we want to build that flexibility in that business so that we can scale up with different business models, partly businesses that CHL will manufacture there, but also with the business there to be able to scale up by different kinds of portfolio that we have, or be able to license. So it's a mix of both. And we would have liked to have the, that acting partner to also actively work on it in a lean and efficient manner.
Okay, great. Thank you.
Thank you. The next question is from the line of Purvi Shah from Sharekhan. Please go ahead.
Yes, so my question is related to the 4 FTFs that you mentioned, that the Vinlas acquisition or appropriately the investment has. So if you could just highlight what kind of like what are the areas and what is the size of these FTFs?
I can ask Vishal to talk later, but we have not disclosed anything right now on that.
Okay. And so the other thing that you mentioned was that, you plan to transfer a couple of products which you have the approval, but you were not able to launch maybe because of the scale which you would like to transfer to Windlass. So wouldn't that take a little bit of time? So is it that you since there are no sales and strategically moving them to that facility makes sense, and so you say that, FY20 onwards what you expect the contribution from those products also which you have approval but are not launched?
Right. We'll need some time, as you said, because we have to do site transfer and then file the product for a change of CB30 or path depending. So most of the commercial value will be created in FY20.
Okay. All the best.
But it has a steady business currently that it
does. So do we add anything from that in this quarter? Have we added anything from the acquisition in this quarter, or it will reflect from second quarter?
No, nothing has been added.
Okay. All the best, sir.
Thank you. We have the next question from the line of Alok Dalal from CLSA. Please go ahead.
Yes, good evening. Question on Windlass only. Sharvil, how many times the plant has been inspected by FDA and any outstanding 483s that they have?
So they have been inspected I want to say 3 times or maybe between 2 to 3 times. And as recently as this year, they have been inspected and they have had 3 observations. Which are not critical.
Today they got the EIR.
And they got the EIR today also.
Okay. So my question is, why not have a contract manufacturing deal with them? Like you also do contract manufacturing for your partners. So why can't you have a deal like a CRAMS deal with them?
Because I think long term we would like to own the entity and scale it up from there. So we don't want to be only a contract manufacturer because you don't get the low cost position if you're just going to be merely a contract manufacturer. You will not be able to commercialize unless you have capabilities to manufacture efficiently. Contract manufacturers will not be able to give you those kind of capabilities.
So before looking at Windlass, were there facilities in US and Europe also available? From what we hear in media, larger companies are looking to divest facilities. So was that an option as well?
No, because the cost positions of these facilities will not make it viable.
Okay, for the products that you want to do.
See, all of these facilities are very high conversion costs. So it's on an ongoing basis, it will be very difficult to be competitive on low value products with those kind of facilities.
And most of these products that you want to have, let's say high volume, low value, you will have your own API backup for you to be even more cost competitive?
Not for all, but for some, yes. Which will have overall value, yes, but not for all. They would have been filed with outsourced API also.
Okay. Second question was related to the guidance only, that you will grow in the US despite the $900 million base. So if we remove Tamiflu and Lialda, which are substantial numbers, they will still be there, but their numbers will decline substantially. So you need to fill up a big gap for these 2 products, even if you want to maintain $900 million. So are you confident that you will be able to achieve that with the high volume, low value kind of products that you are targeting?
So going forward, the products are not all low value products. We have good value products that we are launching, obviously not to the size and scale of these 2 products, but with the important 30 to 35 products that we have which have good value, you would see a good scale up in the last 2 quarters.
Okay, fine. And lastly, Nitin bhai, if you can just share the gross debt and net debt number, please.
5,106 crores. And
5106.
And net is 3,052.
3052.
Yes.
5106 and 3052.
Correct.
Okay. Okay. Thank you for taking my questions.
Thank you. We have the next question from the line of Ashi Anand from Allegro Capital Advisors. Please go ahead.
Yes, thank you for the opportunity. Can you just provide some kind of an update on our vaccine strategy? And we were looking for WHO pre-qualification. I think the target was for FY20. First, can you just give an update on that?
So we continue to get approvals on vaccines and file new vaccines for further development, both some first-in-class as well. We are now scaling up on the commercialization side specific to first the India market. We have launched the influenza vaccine as well as the typhoid conjugate vaccines already in India. We are following it up with at least being able to launch 2 to 3 more vaccines in the next 6 months in the domestic market. And with our ongoing plans, we will go for WHO pre-qualification next year for the critical vaccines like which are important in the immunization program. We are unique in some vaccines like the varicella and the typhoid conjugate vaccine. So we are one of the very few manufacturers of some of these vaccines. So that we will be going ahead in terms of pre-qualifications, and you will see some of it starting from FY20. We have already met with the WHO pre-qualification officials for some of the products that they are very keen to start sourcing. But it will take about 1 to 2 years to get there.
Okay, excellent. And just secondly, if we're looking at biosimilars and vaccines in both India and emerging markets, would it be possible to quantify what kind of revenues we'll be getting from these segments today and, say, potentially over a 3 to 5 year perspective, how much this could scale up by?
Today, the biosimilar is about 250 crores business, largely driven out of India. Going forward in the next 3 to 4 years, we should see a $200 million business getting built for the biosimilars and similarly for the vaccines as well.
Okay, so across both of these, we could be doing $500 million plus over a 3 to 4 year perspective.
Yes.
Thanks a lot, sir.
Thank you. We have the next question from the line of Tushar Munde from Motilal Oswal. Please go ahead.
So just on this Windlass Healthcare again, these FTFs, have they, if you can just help us in terms of whether they're already tied up in terms of distribution for these product post-approval, as in Windlass has tied up with somebody else?
The current business that they're doing is tied up with partners. The future development will be an opportunity to commercialize by Zydus.
And these are largely, and Windlass Healthcare, this facility has got oral solids only, or in the other?
Only oral solids, and it is able to do all simple as well as complicated products.
Got it. Thanks. That's good.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. We have the next question from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, just one clarification on the 505B2, what you launched. Possibly that would have launched under your specialty product portfolio in US. And I think you were talking about building a portfolio of specialty products for US. So any progress there, and also about the field force what that you have created there, and whether that is boosting the employee cost number for this quarter, and how what is the kind of trend that one should anticipate on the employee expenses front going ahead?
Two things. One is we have Sentinel, where we have a specialized products portfolio which is being sold. Zyvitamag is not sold by us. It is outsourced to a marketing agency. So there's no manpower cost which gets added to us for Zyvitamag promotion.
Okay. But this quarter is sequential 7-8% kind of a rise on the employee expenses front, what we are seeing. This is normal, and this is the kind of a base one should see.
It is due to increment.
Okay. Okay. And anything that we have already built, the field force for the specialty business, or we have any
field forces. We don't need to build it from scratch.
Okay. Okay. Any progress on the specialty product front, specialty product portfolio front?
Yes, we have plans. We have 4 projects that we are working on actively right now. We've finished our FDA discussions on some of them. Some we are already getting some, soon to get some approvals. So the plan is on to develop specialty products.
Okay. Most probably this is for the next, the filings would be happening over next few quarter time. Is that right?
Some one or two have happened, and some of them will happen in the last 2 quarters, more importantly next year.
Okay, fine. Thank you, sir.
Thank you. We have the next question from the line of Damayanti Karai from HSBC. Please go ahead. Damayanti, your line is unmuted. Please go ahead with the question.
Hello. Yeah, sorry. My question is related to this supply disruption from China. Has that leading to any kind of pressure on your material costs?
Yes. There has been a steady rise in intermediates and certain costs. So we have also had a 5% increase as of now.
5% increase on back of China disruption. Okay. And going ahead, how do you see this situation to evolve?
It's still firming up, so we could see another 5% increase from the current base on our sourcing.
Okay, so another 5% increase from current quarter level. That's what you're saying?
Yeah.
Okay, okay. And when do you see anything like normalizing on that front, or you are looking for any alternative sources?
Yeah, we have multiple. So part of the increase a lot of it will be offset by the operational efficiencies that we are driving on the manufacturing side. Also, many savings on the indirect side. We are also working and going to be shifting a lot of APIs in-house, which are volume driven, and we already started acting on it since last 8 months. So we have mitigation plans for this. Temporarily, there would be there is firming up of prices that has happened. On the API business, we have been able to pass on most of the price increases. And then by backward integration, we should be able to minimize the impact going forward in the later part of next year.
Okay, but situation won't normalize in this fiscal, and it will go on for quite some time, right? That's your assessment?
Yeah. How much time is very difficult to predict. With the current sourcing, there is price increases that have happened, which we are mitigating by saving on other costs.
Okay, okay. That's helpful. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Ganesh Nayak for closing comments. Thank you, and over to you, sir.
Thank you very much, and look forward to interacting with you during our next Investor Analyst Conference. Thank you, and good night.